They used to shout on the trading floor, paper tickets in the air. Phones ringing, sweat, instinct, and human fear deciding the fate of billions. Now, the room is silent. Rows of servers hum softly. Lines of code move faster than any human ever could. And Wall Street is no longer ruled by people alone. It is ruled by machines. In 1987, on a calm October morning, the US stock market collapsed by more than 22% in a single day. Humans panicked. Computers followed rigid instructions, and Black Monday became the first warning. When machines and markets collide, the impact is massive. That was the beginning. By the early 1990s, a quiet revolution started. A former Cold War codebreaker named Jim Simons believed something radical. Markets weren't chaos. They were patterns. At Renaissance Technologies, Simons replaced traders with mathematicians. No intuition, no opinions, only data. By the late 1990s, his medallion fund was making returns Wall Street had never seen, more than 60% annually. Quietly, consistently, relentlessly. While traditional banks laughed, the future was being written in code. Then came the 2000s. As computing power exploded, Wall Street transformed. Goldman Sachs began hiring engineers instead of traders. Morgan Stanley built algorithmic desks. Trading floors shrank. Server rooms grew. By 2008, the global financial system collapsed. But something unexpected happened. The banks that survived didn't trust humans anymore. They trusted models. Risk was now calculated by algorithms. Portfolios adjusted in milliseconds. Fear was removed, or so they believed. Then, in May 2010, the impossible happened. The market fell nearly 1,000 points in minutes and recovered just as fast. No war, no news, no human explanation. The flash crash. Later investigations revealed a terrifying truth. Algorithms were trading with algorithms, machines reacting to machines. Speed feeding speed. Wall Street had created something it no longer fully controlled. Still, there was no turning back. By the mid-2010s, artificial intelligence took over. Not rule-based programs. Learning systems. BlackRock, managing trillions of dollars, deployed Aladdin, an AI system analyzing risk across global markets. Larry Fink openly said the future of investing would be data-driven or irrelevant. High-frequency trading firms moved next to stock exchanges. Milliseconds became millions. Nanoseconds became fortunes. On Nasdaq, over 70% of trades were now executed by machines. Humans still watched screens, but decisions were no longer theirs. And then came the COSC. In the 1980s, a trader needed instinct and experience. By 2020, they needed Python, statistics, and machine learning. Thousands of traditional trading jobs disappeared. Floor traders, execution clerks, market makers, replaced by a few engineers and one algorithm that never sleeps. But new jobs were born. Quant research, AI risk managers, data scientists. The question was no longer, can you trade? It became, can you build a system that trades better than you? Then the 2020 pandemic hit. Markets crashed and recovered at record speed. Human fear, sight sell. AI models said buy. Algorithms didn't panic. They didn't watch the news. They followed probabilities. For the first time, machines outperformed humans during the most emotional market crisis in modern history. Wall Street noticed. Today AI predicts earnings, reads news, analyzes social media, and detects insider trading patterns. It decides when pensions rebalance, when ETFs move, when volatility spikes. Money no longer waits for permission. But this power comes with danger. AI doesn't understand morality. It doesn't care about consequences. It only if everyone uses similar models, crashes become faster. Bubbles become invisible until they explode, and regulation is always behind. The SEC investigates after the damage is done. Congress asks questions years too late. Technology moves forward anyway. So what does this mean for the future? Traders won't disappear, but they will transform. The next Wall Street legends won't scream on trading floors. They will write code in quiet rooms. Money will move faster. Markets will feel calmer until they aren't. And the line between human decision and machine execution will blur completely. For everyday Americans, the lesson is clear. Markets are no longer emotional. They are mathematical. Long-term discipline beats short-term noise. Understanding risk matters more than chasing hype. And blindly following markets you don't understand is more dangerous than ever. I didn't kill Wall Street. It evolved it. And now, The biggest question isn't whether machines can beat humans. Ite, se, dis. When AI controls the flow of money, who really controls the future? The people who invest or the people who program the machines?